Welcome back to the Daily Hunt. I'm Henry, and in this daily show, we focus on covering some key insights and analysis that I have on the markets. This is stocks, commodities, and crypto. We've had a very, very interesting end to the week. We had a bit of a pickup in certain stocks and sectors, and I've positioned myself in those sectors. I'll be talking about that a little bit later in the video after my analysis about the S&P, Nasdaq, etc. We will be also covering crypto, and I'll give you the reason as to why crypto is selling off. I gave it to you guys around 5-6 days ago when I said the dollar shifting or the Dixie shifting above 99. I think it will create sell off or risk off um, momentum in the market. So crypto and small caps might sell off there with that trigger point of 99. Since then, the Dixie's moved higher, and this is why we're seeing a drop in crypto, a drop in the Russell 2000 stocks as well. Okay, that was my key trigger point. I mentioned it about 5-6 days ago. This is why you guys should be watching this show every day, just to get these extra insights and analysis that I'm looking at. Not everything will work out. Not all of my analysis will be perfect, but a little bit of a trick or tip here and there will make sure that you guys are protected, or at least not losing any money here. Okay. All right, so I will start with the S&P, the Nasdaq, and the VIX and so on. I will start with the stock market first, and then we'll move on to crypto. Crypto is selling off today. Okay, so it's very, very important that we cover crypto as well. All right, so here we have the S&P 500. We had that dip on the 10th, which got bought straight away, and it's a clear sign that look, S&P 500, Nasdaq, they're always going to be bought up unless there's some really key shift in the market. So if we're getting a test of the 20 EMA like we did here, or 20 EMA, if we get a test around that zone, you're probably going to get a buy-in opportunity. Okay, 20 was here. I think 20 was also here and here. These were key buy-in moments, key pivot points. That's exactly what I've done in the markets. I've ended up buying these key pivot points, but positioning myself in what I would consider leaders in the market. And we've shifted now to a new high on the S&P. I mentioned on Friday's video that we have a bit of an issue with breadth. I also mentioned RSP as a potential short there, but it's not a major issue because if you're a good stock picker, you can still find good opportunities that are moving well with the market, and that's where individuals such as myself thrive. Okay, this is what we do. We pick the best stocks. We don't just buy the broad market, and this is how I've been able to outperform the market by 5x this year. So I think the S&P is probably done around 12%. I've done around 70 something percent. So this is what you should be doing as well if you're considering trading. Now, going into the analysis of the chart, there was a bit of a dip after Wednesday. Jerome Powell, I mentioned that, on Friday, I mentioned that there was issues there with him almost shutting the door on a December rate cut. And I think that December rate cut was partially priced in. So that's why we had a bit of a sell-off, and then we had a buy-up again. And it looks okay to me. NASDAQ 100 stocks were doing a lot better. NVIDIA, Palantir's in my portfolio, doing really well. We end up buying them again. We've bought them about 3 or 4 times on these dips. We sell them a little bit better, buy them on the dip. And it was a nice buy. They moved pretty well for me. Salesforce has also moved quite well for me, and I think it's bouncing nicely after this dip here. So as long as the market keeps ticking up higher like this, like these other moments here, or at least is holding up quite nicely, the S&P, because we could see the smaller market cap stocks in the S&P showing some strength, and then the larger ones dropping a little bit. As long as it's ticking up a little bit higher, I think our portfolios will do pretty well, because overall you're going to move up higher because there's more certainty in the market and less volatility. That's what we need. Nasdaq. Right, the Nasdaq is also moving in the right direction. Yes, we had that dip. This is what worries me. It's the larger caps selling off and then dragging the rest of the market with them. That would be really, really, I think it will drag the market a lot more than what people think, just because the smaller caps are not showing any strength. And the market is being held up by these larger caps like Nvidia, Palantir, growth stocks that we have, tech mainly, and yeah. So I feel like that's the only worry that I have right now. At the moment, it's looking pretty decent. We are above the structures that I need for us to feel confident here. A dip again would be normal. I wouldn't like it to go back down to the 20 here, because it means that I would be liquidated in some of the trades, or I would have to get out of those trades really, really quickly. I wouldn't want that, but if it happens, it happens, and I think it'll be healthy for the market. I've mentioned it a few times here that if we got a dip of around 5 to 6% on the S&P, the Nasdaq, it would be good for the market. I think that's where we would build another base for a good run in 2026. Without that, we are always running on this endless fear that this is overextended. However, we know that the markets can continue grind up higher a lot more than most people expect. And this is where we are right now. We are continuously moving up higher, and every dip is being bought, but eventually that will fail. And the only thing that we can do as traders is, in those moments, as long as we have stop losses in place, as long as we are managing risk correctly, and trail stopping in profit some positions, we should be okay. And that's how I operate personally. I don't overthink it. Yes, we're going to have these liquidation events. Yes, we're going to have these drops in the broader market, but it's not going to be a worry for me in my portfolio if I've already done my job. I'm in partial profit, or we are running with some stocks that we've held maybe a couple of months and they've performed well. Those are the kind of things that you have to look at, and move your stop losses to the right zones. If you've just entered new positions, you have stop losses in place, and you also have maybe zones that if they get tested, you minimize that stop loss as much as you can, that loss that you're going to get from those losing positions. So that's really all you can do. Manage risk once you're in. The Russell looks completely different in the sense that it looks like a double top, and it's not moving around the zone. However, it's still holding up this kind of 20 zone. This midpoint is breaking here. Are we going to get moved down? It looks quite likely on this one, if we don't hold here around these areas, that we could easily get a move. If we don't hold that area here on the RSI, we can easily get a move down. Again, I think it will hold up around the similar zones that's held here on these levels. There may be bounce, and then this will be kind of like a deciding point. That's how I see it. The VIX, it was very important last week in the sense that you kind of expect the market to move higher. The market to drop a little bit after or during the Fed decision, because we had this huge drop in the VIX, creating certainty. And yes, okay, that's fine. But it was a bit overextended in the sense that we had to come back to kind of like a normal level and then come back down again. So maybe the dip in the market was correlated with this. So we could kind of see the emotions of other traders, the kind of euphoric rebuying, I guess, in the market here. And we saw the gaps with the Nasdaq and the S&P. And then when you're looking at that, you're kind of saying to yourself, well, typically when it overextends to these levels, we come back down, we'll come back to the mean. The mean was around this zone. We can retest the trend line like we did here. And that's exactly what we've done. Today, we're opening a little bit higher. I think that's normal. But as long as we have a down day for the VIX, we move higher in the markets. At the moment in pre-market with S&P, so I use the US 500 capital.com chart. That usually gives me an idea of where pre-market is. This one, we are seeing a bit of a bounce and it's looking okay. And when I look at the RSI, when I'm looking at where we are, every dip that we've had, we've been bought up, as I've shown you here. And even here, we're being bought up. This one should be bought up. But every time we test that 20 MA zone, maybe a little bit deeper, we get bought up, okay? So it's looking quite healthy. I would like to see this now break up and move a little bit higher, even if we come back down, maybe something like that, okay? That'll be healthy and normal price action, and moving, let's say 0.5 or 1% a day is normal for the S&P. We're not expecting amazing days of like 5-6% a day. 0.5, 0.3 plus here and there. Break-even days, some small red days like this. All good, and healthy price action. I think now I'll cover some of the stocks that I've bought recently. So we get out of this crypto section. We go to some of the stocks. I mentioned Salesforce. It's doing pretty well in the sense that we've had that initial move, that initial breakout, the initial momentum. We've had now the dip, and we're bouncing on that dip, which is making me expect a continuation here. So I'll show you. So I think I'll just show you what we're buying at, right? So we bought around this level. Initial breakout momentum comes back down, right? And I've just drawn a line here what I'm expecting phase of this price action to be. We obviously need to clear this level. And when we're looking at this level, it's a quite dense zone. Okay, I kind of drew that wrong, but I think you'll get it. It's quite a dense zone, and maybe we go up here, and that's where we resist because we have multiple resistance around here. Okay, that's what I'm looking at from my end. We're looking at these zones. It might seem to you guys when I draw like this that maybe it's not the most beautiful drawings, but I'm explaining my logic and where I would kind of see the resistance, and I would want this to be cleared soon. Okay, if this doesn't get cleared and then we come back down like this, we are now in a consolidation stage, and maybe we have to consider selling, and maybe selling for around break even, small profit. Okay, so I don't want to see this. Ideally, I don't want to see this, but if I do see it, it's okay. We could kind of like let it consolidate a few times, maybe break up again. That's what I'm looking at, but it's looking pretty good. I quite like the zones. Take some of the ranges out, so we kind of have this area here as a target, something like that. And then if this breaks, we have this one. Okay, those will be kind of those will be my resistance zones at least. Dave, very, very similar setup here. I won't focus too much on all of these. I kind of I think I might focus on more of the new trades so you get to see it. Dave, I just really like the fact that it was basic for a long time. It's not one of those stocks that will fly. It's not one of those stocks that will move a lot. It did move in April. Since then, we haven't really shown any real momentum. So I was thinking we're basing here, we have to move up higher. I've drawn some squiggly lines here of what I would expect the price to do. I would need it to break up here again around this zone to 245. Kind of start building that momentum for the move higher here and then push through to new highs. Okay. So at the moment we've had this resistance around this zone. Corresponds here. And then we have this zone. And if we want new highs, we need to really show momentum, which we're not showing. So I'm monitoring the situation. I'm in profit. Could move stop losses around break even. I'm not fussed if I sell from break even in a situation. The big plays though were Palantir and Nvidia. I'll just cover those quickly. I think they're more important. The big plays, and then I'll talk about the new buys that I have. Look at this. Since we entered, perfect momentum. I mean, the setup for me was perfect in the sense that we had multiple tests of this zone, and then we were bought up. Momentum kicks in. I just let the market do its thing around here. I let other traders do the hard work. Breakout. We move here. We trade around this zone, and then we've had multiple days of growth. And even today, we're looking quite healthy here for this move. Now, it would be okay if this dropped a little bit and then it kind of like built a little bit slower. I would be okay with that. As long as it grinds up higher, I'm happy with it. And we've ended up trading this multiple times throughout the year, so it's been pretty good. I think we didn't trade this move here, which is a shame, but we're trading this one. Nvidia. I think Nvidia might be in a similar position, hopefully. Yeah, so there you go. Dip, as the market did a bit of a dip. Might open green here, push a bit higher. Hopefully we do something like this. And even if we kind of slow down, we get consolidation here and then allow these kind of average prices to kind of tighten to price rather than price moving to the average price. Okay. So yeah, good breakout here. Liked the way it formed. We traded this move here as well before, so I was kind of watching it for that reason. Nice setup in the sense that we're kind of within this consolidation zone here, similar to Palantir. What I bought last week was IonQ Friday. I don't like buying on Friday, but they look pretty good, and I'm working with a lot of profits on these ones. I've been buying QTS since $1.90. So we're just rebuying, recirculating profits and moving them or positioning them with the growth of the stock. IonQ very similar as well. Okay, so this isn't 100% ready, and I'll explain why. I mean, I think you can kind of see it here with the sense that we have resistance around this zone. But I liked the bounce. I think I've drawn some stuff already. Yeah. I like the bounce. And I thought, worth taking a risk. It's looking more short than long. I thought I'd take the risk by entering early just because I've been able to trade this big move up here and make some decent profits on this. Let's go back to QBTS. I'll go to QBTS now. So QBTS and Rigetti, I think the reason why these are good setups is because not only the theme is good, but and I've been able to trade these since last year. It's also recently we've had news of the US government buying shares in some of these companies. I think QBTS is one of them, and Rigetti. And for that reason, these two are moving better than IonQ. And as you can see here, nice dip. I'll leave the drawings I had. Nice dip. We traded this initial move. Nice dip. Moves up. Moves back up higher. When it broke this 34, 35 zone, this is where I wanted to buy. And that's exactly what I did. I bought around this zone with the idea that maybe we go, even if we go for a double top, I don't mind, because we're working with profits that we've generated over the course of 2 years. I'm just looking to reposition myself with the momentum of this stock and the general theme as well. Other ones, I think there's no point in covering the other ones. They're very similar setups. You kind of have a look at them personally. And then now I think I'll move on to crypto. We'll cover the crypto market really quickly, where I see what I see. It's not looking very good for crypto, I will say this. And as long as we hold this area, we are okay. We need to hold this area here. We need to hold these lows, okay? We've had 1, 2, 3, 4, 5 times test now with today. We need to hold this. I drew a squiggly line here. It's pretty much doing the squiggly line, which is up, down, tighten, and then move up higher. This is where I would be looking to buy, if I'm looking to buy. And then the shorting zone would be the breakout under this level, okay? Under this level, 106, it's a perfect short. You're almost guaranteed to go to 100 or 98, and then it will bounce here, okay? Then we don't know what we'll do. But at the moment, it's a 50-50 zone, very, very risky, very, very choppy. I thought we had this channel that broke, then the volatility came in a few days later with tariffs against China. It's just, how I see it is we had a high volatility, and now it's cooling down and it's tightening, which is very, very good. Because once we break the structures, it will be a final decision in the markets. And we have the weekly as well, which shows this. So if we go to the weekly chart, take off the drawings, very similar to price tightening here. And so we had 1, 2, 3 weeks consolidation, support around this zone. If we get support this week around this zone, all good. If not, we are now going back to 100, and then we're starting to break higher time frame structures. It's looking a bit like a double top on the weekly, similar to this area here. 1, 2, sell off, and then a bigger retest here that we had recently. Double top again, triple top if you want to call it, and then kind of a sell off that I think could lead to a deeper drop, maybe around around 90, 98, 90. Around this zone would probably be ideal. If we're going to get a drop, I think go for it. Some positives are this on the weekly. RSI around this zone has found support 3-4 times now on this huge trend since 2023. So that RSI level, I mentioned it in previous videos, is the key. It's the key. If that breaks, and I think it breaks long-term support of institutional buyers and long-term investors, okay? So that would be, I think these levels are probably where MicroStrategy and all these other big players are buying for some reason, just under that 50. And the reason why that would be is maybe sentiment shifts, fear kicks in, traders sell, and then they go and buy. So it's really a sentiment shift, and we're getting that sentiment shift today. Ethereum, very similar, consolidating. Ethereum is a little bit nicer in my opinion, in the sense that we have a perfect bull flag channel developing as long as we hold. this structure. The probabilities are that we're going to hold because we've held it 3 or 4 times. However, there is that sense that if we're going to test that zone for 4th or 5th time, we're probably going to cause a sell-off. But I'll just put the drawings back on. There you go. So, right. So here we have it. Almost perfect. Okay. Almost perfect in the sense that we've had all the tests that we've needed to have within the channel. We could come back down to 3.5. That would be a perfect retest of the zones on a weekly. It would be this kind of retest of the zone that we had on the 10th as well. And then we build up from here. So in reality, we could have a sell-off early November, as long as we find support on the weekly and the monthly on Bitcoin and Ethereum. The market is pretty good. It's still bullish. I wouldn't say the market is bearish. The only problem I see with crypto is altcoins are just very, very bearish, and they're not structured in the same way. Of course, we have XRP, which is pretty decent. It's got kind of a decent formation there. Link as well is quite nice. And some other opportunities here, like Zcash has been performing exceptionally well. One of the ideas that I've shared in the Discord, and a few others. But overall, we are very reliant on Bitcoin, and Ethereum at the moment has shown strength and has been the best performing, I think, crypto out of the large caps in the last year. And this is the one I've been trading the most and going in heavy. So if we come back down here, it's okay. I don't really mind it around 3.5, as long as we don't break that level. Yes, we can do a shadow like this, maybe go a little bit deeper, 3.3, 3.4, and then we move up higher. But it's definitely something to keep an eye out with if this breaks. And I think at the moment we also have a static support zone. 1, 2, 3, 4, 5 needs to hold. This breaks, brings in some bears, maybe traps them in here with a fake bearish movement, and then comes back up and it moves up higher. That would be ideal. That would be the ideal move. Now, whether we get that, it's a different story. It's what I'm watching for. I'm not really looking to trade the short, just because when I look at this, it doesn't really give me short vibes, It just gives me volatility, bull flag. And I have said it over and over again on social media, both with this one, which is my personal channel, as well as the Albanian podcast that we run. Since August, late August, I've said that November will be the decisive month for the markets, and it's proven to be the case. It was purely based on the fact that Ethereum was overextended on the monthly in August, and it needed that little bit of a pullback to test those zones. It's tested those zones, and now we could rebuild from those zones. Even if we can retest one more time, there's more likelihood of a rebuild around those zones and a buy up from position traders and institutions. So it's kind of like I would say the perfect setup, okay, for that bullish move. Yes, we have the risk of Bitcoin dipping down to 90K and ruining everything, but we always have that risk. We always have the risk of Bitcoin dropping 10-20% and dragging the whole market down. But it's looking okay for me personally, and I'm all cash, so I'm just waiting. And just so you guys know, being cash is also a position, because you're technically short crypto, and you can buy them at cheaper prices later. Bitcoin dominance will be something that we should cover today, and then USDT dominance, again linked with the dollar. Dixie, I mentioned earlier in the video, the opening of the video. I think it's very important that we look at the dollar now. with the way the Dixie has moved and what I've mentioned. Bitcoin is showing dominance, very, very clear here. And what I expected, and I'll show you what an alt season would look like. It's very important that you guys understand what an alt season will look like. So Bitcoin dominance moves up higher. We had the first wave from June here, and it was a decent wave in alts. We had some momentum building up, Bitcoin dominance drops, some positivity, and then I was expecting September, October to be short for alts and long Bitcoin dominance moving up higher. I thought maybe 61. This moved up all the way to 63 because of the unexpected selling off in October 10th. So that was the tariff event. So obviously you can't price that in because you don't know when Trump is going to come out and add something unexpected. But at least I knew that we would move up higher to around 61, maybe 62. At the moment, this is the beauty of this setup, is we could see November dominance rise, go around this zone, and then the other part of November come back down, close around break even on the dominance, and then we break this structure here, right? We would need to break 59, and on the way down, maybe 60. So as long as we go above 60, that would be the big sell-off. If we hold this 60 zone, we are good. We are good because we can resist, and then we can slowly build that momentum over the course of 1 or 2 months where we see growth in altcoins. This is what I'll be looking at moving forward alongside the USDT. Right, so USDT doesn't look like the Dixie. And this is the reason why I watch the Dixie more than USDT. But if we look at the situation here, we're getting a bit of a sell-off now. Why isn't this shooting up? It's looking like it will. And like I said, maybe we get a move. Oh, this is the monthly, sorry. We have to look at the monthly. So we have to look at the daily. Yeah, so we're getting a bit of a sell-off here from the 10th, and then we're moving up higher, okay? Logical move. The dollar moves up higher. More people are holding it. They're getting out of the market. Now, the zones that we might hit again are this 5.28%. And as long as we resist around this area and the dominance resist around that 60, 61 zone again for Bitcoin, we still have hope of that momentum shifting back to the long side for alts. And then we need Bitcoin to still rise as the dollar drops. And then we need we would need alts as well to show strength there relative to Bitcoin. It's very, very tricky, but I'm focusing more on the Dixie than the USDT, and the Dixie gave me that signal to sell off. And I mentioned this 5-6 days ago. There's short videos that I posted online. There is on YouTube, as well as other social medias. There is also the full episode around 5 or 6 days ago, where I mentioned that if we break the 99 zone, we are going to sell off on risk on assets like crypto, as well as growth stocks. So we're talking about the Russell 2000. That's exactly what we've done. So this, when I say stuff like this, it's just a warning sign for you guys to monitor. Of course, it's not financial advice. I'm not saying sell here. I'm saying if this happens, this is what I'm looking to do. That's exactly what I did. I ended up selling my crypto, 100% cash around that period. And then I have been very, very selective with the trades I put in for stocks. We could have gone in short gold, which we did. We shorted gold from 4.3K So we're kind of taking advantage of that opportunity where the US dollar is strengthening. And here we are. Okay. So maybe we get the resistance here, but I am seeing some opportunity for a move to around 101. 101. As long as we hold this trend line, we are bullish. So even if we go down here and we get some rise in other assets, even if we go down here and then we bounce and move up higher, we are still bullish. And I think the first resistance is around this 100 zone, or just above 100, 100.3. And then after, maybe we get some resistance sell off. Logical, because we will be overextended. We'll see a bit of a rise in other assets, and then we'll see how it moves. It's not a bad setup, okay? It's taking time, and November is the decisive month. I've mentioned it before, and I'll continue saying this. We will decide probably the second half of November where the market goes, maybe the second week of November. This is my opinion from what I'm seeing. If the levels I mentioned don't get completely shattered by an event or some tariff talk or something else that's been happening to add that volatility, if these levels are finding support, then we still have hope of that bullish momentum kicking in around mid-November, leading up for that Santa Claus rally and other catalysts in the next few weeks. I'll cover commodities really quickly, and then we'll wrap up the daily show. We covered the Dixie, which is very important in the current situation. This is just profit taking, okay? We shouldn't be worried about the market too much. It's profit taking. In risk on assets, it's getting out because they're worried about potential drop. We've seen global markets pick up again. The Japanese market and the Korean market have been absolutely amazing. One of my biggest regrets this year is not trading that market enough, and also it's a regret because I was watching some of the key players in that market like Samsung and Hyundai in Korea and some other ideas in the Japanese market as well. But it's okay. We're seeing a bit of a pickup with the DAX, the CAC 40 as well here, picking up a little bit. Okay, picking up a little bit here, showing momentum. We could have traded around this zone. Around January to Feb of this year is when I traded the French market quite a lot because it provided protection. And it was pretty well, moved pretty well for me with some of the banking stocks there, BNP Paribas and ACA Agricole. Natural gas keeps on rising. We can monitor that. I'm monitoring some stocks, but they're not performing well. US oil bouncing around the zone that I mentioned in the last few videos. Here, I would want it to break above the trend line, and then gold. We'll finish up with gold, and just wrap it up here for today. Right, my chart's playing up a little bit, so let's wrap it up for today. That's all for today. We'll cover gold tomorrow, but it's around that zone that I've always mentioned, and I mentioned in the last few videos, around this 4K zone, and it's deciding the direction.